Robert Parker, Senior Advisor at Credit Suisse, joins us on the show right now. Robert, hi, good morning. Clearly, a lack of political consensus has been threatening to derail the crucial reforms in India. Would you say that is the single largest hindrance to the country's long-term prospects?
Well, I think one area to highlight is the current debate about who sets interest rate policy in India. And I think the Indian government needs to be very careful about this, because if they send a message to foreign investors that the independence of the Reserve Bank of India is going to be challenged or threatened, and that authority for setting monetary policy will be taken away from the Reserve Bank of India, I think that would send a very negative message to foreign investors. So, I hope that this current discussion on the authority of the RBI, I hope that is pushed back. I think in terms of other areas on policy, I think one has to say that the action taken on the budget deficit is certainly heading in the right direction. But I do think that measures to improve the ease of foreign investment, I think that's still very much work in progress. And I hope that this level of bureaucracy around foreign investment, and most notably the infrastructure sector, which is so critical for India, I do hope that we will see actually a good path for ease of foreign investment there.
So what exactly are you expecting from India's RBI upcoming policy? Is there a case for a rate cut?
Well, they've obviously cut rates, quite significantly over the last year, on the assumption that growth is 7.5%, on the assumption that the headline CPI numbers come in at around 5.5%. I think there is scope for a further very moderate cut in interest rates. But I think, frankly, by the end of this year, the maximum would be, another 25 basis points. And I think that, yes, we are going to see lower bond yields, but again, the movement is going to be fairly minor.
So does India offer a compelling investment option among the emerging market basket?
Well, I think it's one important message is to stop looking at emerging markets as one distinct asset class, because what we've seen, particularly in the last 1 to 2 years, has been increasing divergence between the performance and prospects of emerging economies. And if one just looks at the BRIC economies, we have Russia in recession, we have Brazil with political issues, problems of corporate governance and corruption, a weak currency and very high interest rates, with 10-year bond yields now above 13%. In contrast, we have Indian growth accelerating, Chinese growth still slowing down, but still reasonably good at 6.5% to 7%. But if one looks at the BRIC economies, India currently stands out as actually the best economic performance, and therefore I think that the underperformance in the Sensex in the first half of this year will actually now reverse.
Robert, good chatting with you. Thank you so much for taking the time out and sharing your perspective on India with us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.